So we're going to, thanks a lot for having us here. This is Mahesh SWAMINATHAN, and I have 2.5 decades of experience in data and AI. Work for Capgemini, global leader in consulting.
And I'm Stéphane RIO, the CEO and founder of Opensee. We are a next generation of data management and data analytics with an AI-first approach. We are based in Paris, but also in Singapore, thanks to BPI, who invited us now 6 years ago here. We even had a closing party in this very same building. And maybe
we are going to talk about data foundation for trust and growth. And it's good that the previous session ended it with a note on data. So it's a good segue. So maybe, Stéphane, you can set the context here.
Yeah, maybe to frame a bit what we're going to talk about, we are going to talk about data, but in the context of the financial industry. It's obviously a little bit special, although I'm sure it applies to many other industries. Data comes in big number to start with. Some firms are generating internally millions, billions, thousands of billions of data every day. This data is very sensitive. You can imagine that your liquidity data, your risk data, etc., should not be accessible by everyone. It needs to be very, very secure. There's regulatory behind the scene, which of course brings a big play. It's an industry that has been there for a long time, so technology has not been always there for just a few years. There's a bit of legacy hanging around, which is something you need to take care of. And of course, with the arrival of AI everywhere and the LLMs and the agentic, everybody wants to use this data, often a lot of structured data, more. But it doesn't come easily because you need to desilo, you need to have proper governance around your data, you need to have data trust.
Thanks, Stéphane, for setting that context. Data trust is indeed very, very essential when you talk about an organization's core asset. So when I talk about data trust, what do I mean? I mean by having the data that is correct, that is actually complete, that is secure, that is timely, and of course that is ethically governed. And of course it is traceable as well. Without the right data trust and governance, you will end up with AML false positives, you will end up with, you will have stress testing failures as well, and it leads to regulatory penalties, it leads to operational losses, it leads to loss of reputation. So typically the data trust framework would refer to a bunch of pillars. The first one would be identifying the risks or gaps that you have, whether it's data quality or security, and then, of course, classifying them based on the assessment, whether it's severe or critical, and then prioritizing them. And then, of course, addressing them in terms of the technology and processes. Once you do that, of course, you are in a position to continuously monitor and, of course, improve. And why do I say improvement is because, of course, the business is changing, the regulations are changing, and of course, the threats are evolving as well. So if you look at all of that, you want your system to adapt. You want the system also to have a means to adopt new technology and processes as well. So when you take all of this into account, a sound data trust framework is required. And when I look at a sound data trust framework, data governance, culture plays a big role. Also plays a big role is the technology. So maybe, Stéphane, you can cover that aspect of technology.
Yeah, of course, that's what we do every day. But I agree. I mean, the link between change of processes, change of culture, and change of technology goes hand in hand. It's often the other way. We're trying to change technology, and we don't see the change of processes behind. So again, I will do like you, maybe simplify it to 3 main pillars, which are virtually the same. You need data integrity, so you need lineage, you need auditability, and you need to think about it through the entire chain. The regulators are asking for it now, and historically, the data chain has been completely segmented with some handover which were not very clear. So it's very hard to kind of bring this bridges if they have not been built from the outset. So that's the first one. The second one is about timeliness, and it's about scalability. Timeliness because historically, again, we have been working on the world of end-of-day processing, a lot of batches, but data comes all the day. So there are two aspects of the timeliness. Is you have a question to your data, you want an immediate answer, you don't want a batch running for you, so you want interactivity with your data, which is not easy when you're talking about terabytes of data. The second aspect is you want the data to refresh. The data is coming all the day. Your risk data, your liquidity data, or your ML, everywhere the data is refreshing intraday, and you want to have a process which is working well enough that you can update that all the day. It's probably simple in other industries, but it's not that easy here. And the third point is you want data that is desiloed, that is accessible by the users, and that means it's not a technical product. You're talking about having, from a technical perspective, it's often referred as a semantic layer. So that's the interface between the data in a structured way, in a database or wherever with a data model, and how it looks to the users. It needs to be intuitive, it needs to be well documented, you need to have a data catalog, and that's a key pillar for the next step. I mean, we're all going to the next phase of how we can use this data using LLM agentic. And the first thing that is going to be required is for this data to be understandable by those agents. And if end users can understand, agents are going to be able to use it. So that's very important. So maybe my last point will be when you're implementing the next phase, which is introduction of agentic into your structured data analysis, make sure that you separate what the LLM can be trustable, which is more or less interpret natural language, and bring the calculation programmatically. So don't, at this stage, in 2 years, 3 years, 5 years, I don't know, but at this stage, don't delegate the calculation. It's very bad at doing math, we know that. So do what they can control, which is this part, and use agents to control as well. And then you go back in your trustable world where you can be comfortable with what you're doing, even with agentic.
Yes, so Stéphane, I think business outcome is the critical factor here. And that's enabled by data trust, of course. By business outcome, of course, you can achieve growth. And by growth, one of the aspects that you can talk about is the data monetization. Data monetization is the harnessing of value from data, which leads to a revenue opportunity for the organization. Now, in the banking world, I can see few areas where this could be true. The first one is the operational aspects, where you have the credit risk assessment or fraud management or auto loan approval, each of which could be enabled using the data trust by having those guardrails and governance. And what it does is it allows the organization to control its operating expenses as well, operating cost as well. And the second part, which I see, is also the customer personalization. Here you leverage the insights that is derived from the data to advise the customer on the right financial products to choose. What it does is it allows you to have a better customer satisfaction. It allows you to have customer retention, and of course, opens up the opportunity for upsell as well. The third area that I can look at is the information products. Typically, large institutions look at the data in an anonymized, summarized manner where the data is giving them the trends. These trends are actually useful for the LOBs or lines of businesses within the organization, as well as the partners, possibly the fintech partners as well. So in a nutshell, data trust enables that growth. And maybe, Stéphane, you can share a few from your experience as well.
Yeah, no, completely agree with your use cases. And maybe I'll cover it in a slightly different way, is in terms of the step of the processes where this new technology can be why it's going to be useful to get further and to use this data, which is in so big numbers, as I mentioned earlier. And I see, maybe at the very least, two big blocks. One, I think it's an opener for accessing this data in a much easier way. The data today is often reserved, it was reserved only to IT guys or quants. Now you have some specialists, some analysts, but with the ability to interact the data with natural conversation, you are able to push that all over the place. And in particular, there are these flows in firms where top management is asking a question and it flows down X number of steps and the answer comes hours, days after. And by the time you receive an answer, you obviously a second question to ask. All that can be completely streamlined now, where you're interacting directly. You can ask them very complex questions, which are just not translating into one query to data, but a chain of thoughts. And I think that's a big game changer. We're just at the beginning of that because, again, the foundations are not always there, but it's coming. The second point is, I think, is on automation. And automation, we see it at least at 2 steps. One, the generation of report. There's a lot of activity which are repeating every day. You make your risk management report, you make your liquidity report. Any type of daily or monthly reports can be very much automated with, again, some much more than just an automation. There is really some thinking, depending on the result you find at the beginning. Your agents are going to be clever enough to navigate through this kind of tree of decision. And that's, again, you're changing days of work into minutes, potentially. And of course, I always call it AI first, because there's going to be a human. But if the human can just bring the kind of intelligence at the end, rather than spending his time in the plumbing, that's going to be much better. And maybe the final use case, which I like, is it's kind of close the loop. We're also using it for building the data product itself. So building data models, building the data trust, the data quality elements can also be much more automated now with all this AI technology. So that's kind of close the loop and helps to consume it even more.
Yes, and I can echo this as well. I see many of the customers are also in the same bandwagon in terms of adopting data trust as a foundation for growth. I see a large bank using data in terms of the real-time transactional data, running machine learning models on top of it, and preventing frauds, as well as using that for credit risk assessment. To the tune of 20%, they're able to save the costs. Of course, all of this is possible because of the fact that there is a sound governance process, adherence to regulations like GDPR as well. I see another payment major who's using the aggregated, anonymized, secure data to share the trends to its ecosystem partners as well. Of course, that is adding net value to all the partners. So that's the power of data whenever it's governed very well.
Yeah, no, I think we see that same and similar use cases. So maybe I can illustrate a different angle, and that's on the hedge fund asset management side. Hedge fund, one of the largest hedge fund. Also, the dynamic of how AI is transforming, I think, the way people are looking at their data. I mean, it's a conversation we have had for a couple of years, where the data foundation was good enough for the day-to-day activity. What worked yesterday can work tomorrow. Now the challenge was different. They want to automate. They want to leverage the agentics. They want to empower all their traders directly to use the risk data. And suddenly they realized that this was not going to be good enough to do it with the current data foundation. So we are replatforming with them on that basis. We are accelerating, automating, basically, what was taking half a day to clean the data in the morning, so that when the activity starts, in fact, everything is ready, and not just the risk analyst can access the data, but the entire community of portfolio managers can interact, the top managers. And again, I'm back to my example earlier on. If you have a question, just ask for it. Don't ask the dedicated specialist. So you're really opening the data, and you can see it. I don't know if it's why we're called Opensee, but maybe that is.
Thanks.
Thank you for it.
Thanks for having us here.